Long time no see. It's been a while, and the reason why it's been a while is because so much has been happening, and I honestly wanted to wait for the dust to settle before I make another video. But one of you guys who watches my videos, so thank you. I think Kyle Euro 808. I'll put it on the screen. Not only requested that I make more video, but that I make a video specifically about what's happening in the stock market and you know, what stocks I've been buying on the dip and all that stuff. And as you probably have read from the title, I am down $200,000. And I'm not just saying that, it's true, and I have the screenshots to prove it. And that's what this video is pretty much about. I will take you through the decline of my portfolio while explaining to you what's been going on with the market, what's the whole interest rate situation is, and what's the bond yield and all that stuff. So I will explain it to you as I show you the progression. And please notice I'm doing progression of my portfolio. So let's start off with February 16th. So February 16th was actually my favorite day. I woke up that day, it was a beautiful morning, the sun was shining, it was great. And it also happened to be my personal best day in the stock market. I actually closed out the day with a $42,000 gain. And at that point, my portfolio was sitting at $690, which was very exciting for me because I was only 10K short from $700,000 portfolio, which would have actually made me a millionaire. So that's $700K in Fidelity stocks. I also have a little bit over 100K in my 401k, and I own 2 properties with about 200K equity. So that's $1 million in assets. So when I was at 690 on Tuesday, I was for sure like, all right, I'm going to hit 700 by Friday. And I was gonna like go into the weekend just straight up popping bottles. Like I was gonna have a real Dave Chappelle moment. It was gonna be great. It was gonna be great. And then the next day, the 17th, my portfolio was like down $20,000. And I was like, oh, okay, that's cool, but you know, it's only like half of my gain from yesterday. That's fine. And then Thursday, which is when it really started happening, was the day that Jerome Powell, who is the chair of the Federal Reserve, was supposed to like testify in Congress. And at that point, it really started happening where like people were really worried that he was going to raise interest rate. So let's stop right here and talk about interest rate and why it's such a big deal to the stock market. So the reason why the Federal Reserve would want to raise interest rate is to kind of like combat inflation, right? So obviously inflation is bad. So if the idea is if you raise interest rate, people are less likely to borrow money, and if people are less likely to borrow money, they have less spending power. So they're not gonna be out there just spending money because they don't have that much money. But that's just not just for regular people, but mostly for businesses. Well, banks borrow money from the Federal Reserve, and businesses borrow money from the banks. So this affects the stock market because if it costs businesses more money to borrow money, does that make sense? More money to borrow money. Yeah, I guess more money to borrow money, then they're not gonna borrow as much money. And if they don't borrow as much money, then that can really stifle their growth. So especially for a tech company, like if you ever looked at the tech company balance sheet, there's always this line item that's like R&D, that stands for research and development. Like tech spent a lot of money on research and development, and in growth, right? So if they don't have that much money to be spending on these research and development and like other ventures, then that might effectively affect their earnings. And if that affects their earnings, then that obviously affects their stock price. Hopefully you got that. So that's why, I mean, there's a whole market sell-off, but particularly tech companies, because they're essentially growth companies, right? So that's the whole deal with the interest rate. So that's why the market was like tripping out. So Jerome goes to Congress. He states that he's not going to raise interest rate in the short term, but it's coming. So totally forgot to mention this, but that day my portfolio was down an additional 40K. So that's the 20K from yesterday, the 40K from today. So I'm down 60K total at this point. At that point, I felt like the market was still like, yeah, even though you're not gonna raise it now, today, but it's still coming. So there was still a sell-off happening. And by February 26th, which was the last day of, well, it wasn't really the last day of February, but it was the last trading day of February, my portfolio was 591. So if you do the math from Tuesday the 16th, when it was at 690 to 591, I have lost, well, I am down $100,000. And also I should mention, I think in between that Tuesday and then that Friday where I'm like down 100K, there was also the resurgence of the GameStop saga. Apparently Ryan Cohen, which is like the CEO of GameStop, posted like a Twitter picture of an ice cream. People took that to mean something, and they like went back to GameStop, and a lot of people were selling stocks to just go chase GameStop. So that also contributed to like the downfall of my portfolio. So, but you know, that Friday, even though I was down 100K, I was actually up that day by about 9K, and I just felt like, okay, the whole interest rate thing, the whole GameStop thing is behind us. Monday's March, it's a new beginning, it's a new day, it's gonna be great. It's gonna be great. We're gonna go back to normal, and I'm gonna make that $100,000 back. Cool. Monday comes around, and Monday, March 1st, like this week, Monday comes around, and the market is up. I'm like, see, I knew it. Of course it's up. Everything's fine. Yo, I need a drink. So Tuesday come, and now we have a brand new concern. It's not just interest rate, it's bond yields, right? You might be hearing that, like the bond yields are increasing, whatever they're saying. So bonds are another type of securities, and bonds are basically backed by the government, which makes them guaranteed. So whenever bond interest rate go up, stocks go down. And the reason is, if the government is saying, hey, if you buy this 5-year bond or 10-year bond or whatever, we're gonna give you 3%, a person might be, not me, a person might be inclined to just go buy this guaranteed 3% versus having their money in the stock market, which can go either up or down. And you're probably thinking, well, 3% is not a lot, but 3% is a whole lot more than a regular checking account, and 3% guaranteed might be a lot better to someone than putting their money in the stock market, which might go up or down. So whenever bond yield go up, stock go down. So that's what's been happening this week in particular. So it's a combination of interest rate fear and bond yield. And it's been bad, guys. Today, Thursday, the 4th, literally, like, I was like, I don't think I've ever seen something like this. In all honesty, like today specifically, at one point, I was down about 60K. And I ended up closing out the market being down $47,000. And currently my portfolio is sitting at $508,000. So if we do the math from that beautiful Tuesday when it was 690 to right now, right this second, it's 508, that's about 182, 83K. And when you take into account my 401k portfolio, I've lost about 12 to 15,000 there in the last 2 weeks. That puts me at $200,000. Honestly, like, it's tough, but I also understand that it's paper loss, right? You don't lose until you actually sell, and I haven't sold anything. At this point, I honestly do not know if we've hit the bottom. Like, I thought we hit the bottom February 26th. Like, I really thought I was gonna like walk into March like, you know, with a whole swag. Today, after today, I don't know. I honestly do not know. But what I would say is, don't freak out. So my camera overheated and decided to just shut itself off. Sony cameras are known for that. It's mad disrespectful. It happens all the time. But in any event, I actually wanted to end on that note of saying, don't freak out. I know it's tough. Hopefully, me being transparent and showing you my portfolio kind of like helps out a bit and letting you know like you're not alone. And hopefully I explained the whole interest rate and bond yield fear. If you have any question, let me know. If you need emotional support, let me know. But honestly, it's all gonna be fine. And on the next video, I'll go over some of the stocks that I've been buying on the dip and what is my strategy for the future if this continues. So once again, thank you for watching, and I will see you on the next video.